Hey guys, John Henry here. I wanted to take a look at a couple really interesting things that happened on the S&P from the psychological standpoint. So we opened up the day yesterday. First of all, we ended with a very large bear channel working lower. And then we open up today with this gargantuan gap, right? We closed yesterday at 57 and we opened today all the way down here at 42. Now, that big of a gap down, anybody who was short, because it already had a bearish tendency yesterday, we open up all the way down here. I don't know about you, but if you open up and you give me a free 10 points on the morning, I'm probably going to close my position, right? So we know that a lot of buying pressure is likely to happen on this initial move. And that's mainly because everybody's taking profit. With that big of a move down, you come in the morning and you're up 10 points on the S&P, close the button and go right back home, right? So we know that a lot of buyers are going to try to come in here and push the market up. So we're expecting a slight up move. What doesn't happen though is that up move. We get a very, very weak bull candle follow through on the initial first 5-minute candle of the day. Now, with that amount of wick on the top here, we're seeing that buyers might be a little bit greedy, right? They open up 10 points down. They don't even show that they want to get out of the position. And then we turn into a massive bear candle lower. So that massive bear candle lower is telling us, well, wait a minute. We should have seen a bullish pop here, and we didn't. There are going to be a lot of buyers who bought this open thinking that that was going to happen, and now they're stuck. So the fact that there are a bunch of buyers stuck on top of earlier sellers from yesterday getting greedy, we're expecting a quick snap lower, and that's an easy sell for a quick scalp to the downside. Now, we're not looking for a big move down because we are anticipating that the greedy sellers from yesterday are going to take profit when it starts moving back lower again as soon as there are signs of weakness. We get those big signs of weakness right down here, huge wick on the bottom. Any seller that did take that short for the move down, assuming that we're trapping out the buyers who tried buying this back up, well, you got your targets to the downside and you don't really want to hang on to it anymore as soon as it turns into a bull move up. Because essentially now, all of the sellers that were greedy on that aren't going to want to try to hold through a relatively strong bull candle. They're up 10 points, now probably 15 points. They're just going to close the position, right? So they close the position, and then we start getting that move up that all of these poor buyers who got whipped out on were looking for. That is an easy buy right above that, looking back up towards the highs. Now, why aren't we looking for that move all the way back up? Well, primarily because the sellers they initiated this move down. So if it comes back up to their highs, they're going to try to defend that level. They're not going to want to see it get through that area by very much. So we're buying here, assuming for a move back up to the high a day, and that was an easy move all the way back up 3 candles. That's 15 minutes in the trade, and you had a beautiful run back up to the highs. We get back up to the highs, and again, we're anticipating the sellers defending their initial position. So what we need to see is the buyers failing to get their move going, right? We close outside of that high after an initial 1-tick break of the highs. They fail, and they immediately push right back in. Now, sellers are kind of looking at this thinking, man, I don't really know if I want to sell underneath that first attempt down after, 20 minutes to the upside. I might want to wait for it to turn down again and just take that second time, right? So aggressive sellers will begin scaling in underneath here. Conservative sellers are waiting for a slightly, just a little more information. Give me a little bit more. Maybe they're watching a bull channel rising up here. Maybe they're watching a wider bull channel after we start getting some bouncing. They're going to wait to see that broken first, and that doesn't happen until over here. Now, the second time the sellers turn down off of the highs, right? They turn down the first time, they pull back up. The bulls try to get that last move going, and absolutely no follow through. Any buyers that are left in the move are going to sell out of the position and drive that move right back down again. And that is a beautiful sell, either there, or either there for a quick move right back lower. And you can't really ask for a much better morning than that. We're in a range, folks. We're in a range. Sell high and buy low. And that's going to be the motto for the rest of the day. So when you combine that psychological view with technical analysis, honestly, you can't really ask for a better 1-2 punch. And this is a beautiful example of how you could have easily made a boatload of money today just trading it that way. So hopefully you found this enjoyable. Hopefully it was helpful to you and you learned something. And we'll see you next time.